11 years ago, when AFCA first came to Lagos, we were defining private equity for the ecosystem. When I would say to people, you come to the AFCA conference, they were like, what's that? And there was a huge misunderstanding about how private capital can play a role in enabling the unlocking of potential in Nigeria and in Africa as a whole. Fast forward to now, I think the number of registrations have shown the passion and excitement about the conference, and not just from private equity practitioners, but also entrepreneurs, corporates who are keen to understand how private equity can indeed help them to catalyze and scale their growth. So the investment climate in Nigeria in particular is on an up. Yes, Nigeria suffered from some of the macroeconomic currency headwinds, but every company that we've invested in, despite the headwinds, they are growing. In every sector, we're seeing more activity in the agricultural sector. We're seeing more domestic processing. You know, when problems are the necessity for invention, and what you're seeing is that because of those import problems, you're seeing more domestic manufacturing take-up, which is helping with import substitution. Also, with the youth dividend that we have, I mean, the numbers all speak for themselves with respect to the potential of the African youth. We're seeing more interest in investment in the creative economy, the tech space. Again, 11 years ago, when AFCA came, my firm, Alitheia, was one of the few that was talking about the fintech space and the technology space and investment. And now we have a whole 2 days of venture capital conference preceding the private equity conference. So we're seeing more players, we're seeing more interest, and certainly since 11 years ago, we've seen significant investment. Over $5 billion has gone into technology investments in the sector. And we're seeing growth, we've seen exits. So really, altogether, more capital, more participants, more interest, more exits. It all is coming together for greater opportunity in this climate. Well, again, 11 years ago, which was about the time we were beginning to kick off on our gender lens strategy, having successfully introduced into the market the whole concept of impact investing and the whole concept of how we use technology to make it possible for ordinary folk to have access to essential services for impact investing. We then, again, we like hard things at Alitheia, kicked off on gender lens. And right then again, it was, what is this? Is this a gimmick? Is it charity? Fast forward 11 years later, Alitheia raised the largest gender lens fund on the continent, over $100 million. We've invested in over 13 businesses that are either women-led or women-impacted. About 70% of those are actually led by female founders. And if I look at the ecosystem, one of the key challenges was the fact that less than 2% of funding was going to women-led businesses, despite the fact that at least 50% of SMEs on the continent are led by women. And part of that was a lack of intentionality. And what do I mean by that? Well, the asset allocators, the ecosystem was overly male-dominated. So the asset allocators had a blind spot and an unconscious bias around the kind of founders that they were following. I've spoken about this in a number of forums where performance buyers, and this is globally, not just in Africa, not just in Nigeria, where it's typically thought that the male founder is going to perform better, or they're able to speak up the opportunity more, and the woman is being considered on the risk factors, or even affinity bias. 11 years ago, again, there was a dearth of female fund managers on the continent. So the ability to operate in spaces where female founders were also operating in, or where even female allocators were operating, there wasn't that much of an overlap. It was too male-dominated, which meant that there was a certain focus on certain large, maybe infrastructure, hard project investments, whereas we've come along, we're looking at feminine hygiene products, we're looking at female founders in the creative space, we're looking at female founders who are making money with empathy. One of our companies is based out in nearly middle part of Nigeria, where she went because she wanted to be closer to the farmers, to help them increase their yield, but also help them in terms of overcoming the logistical challenges of getting their products, their farm produce to the factory gates. So she's situated right in the middle of these farmers and is therefore able to reduce wastage of agricultural products. She's able to process very fresh products into cassava flour in this case, so she's processing cassava, and into sorbitol, which goes as an ingredient into many FMCG products, and exporting. So demonstrating the impact that when you look at a diverse group of founders, you see diverse opportunities, diverse perspectives. What we also see is 11 years later as a Gender Lens Fund, being able to speak to male founders about how they are proactively leveraging gender as a factor for success. Diversity in the boardroom, for diversity of perspectives, for better decision making, for greater governance. We're seeing that that is helping us to drive on superior performance. So we're glad to say that at an Alitheia fund level, at a portfolio company level, we are pushing significantly. We're investing in commercially driven enterprises, in diverse businesses. We're driving for significant job creation, millions of jobs, over 70% of which we've been intentional go to female founders. So we're seeing progress. At an ecosystem level, there's more work to be done to have more female allocators, and we're working with the ecosystem to see that happen. On the first instance, it is about opportunity. When we invested in Baobab a few years ago, we invested in a bank that was one room in northern Nigeria, in a hard part of the country to run a financial services business. And fast forward to when we exited a few months ago, this has become a national microfinance bank, a national champion, operating across nearly 10 states of the country. Its balance sheet has grown some 4,000%. The customer base has similarly grown hundreds of percentages. And so in multiples, we've been able to grow and scale a business that was then attractive to other investors. Now, what are some of those lessons that we learned? There's opportunity. In spite of the macro headwinds, companies are growing. They are growing in multiples. There's latent demand for essential services, financial services being one of those. There is significant opportunity to grow champions in this nation. And there are challenges, but there are opportunities because of that latent demand. And private capital plays a key role. Now, we were able to have that success at the bank level, but think about the trickle-down effect to the SMEs, which are the engine of growth. So diligence, persistence, sweat, blood and tears is necessary, but it's worth it at the end. And it really is about also looking for the right kind of managers to back and having our eyes on the door so that we can indeed build businesses that can be exited and generate returns for our investors, but more importantly, unlock opportunity for the millions of Africans across this continent so that they can reach their full potential. Thank you for that question. In fact, again, 11 years ago, pioneer fintech investor. A couple of years after that, we started the first clean energy fund. And I've also spoken about the Gender Lens Fund that we helped to pioneer and even grow an industry. Now we're bringing all those lessons. Alitheia is going to be 20 years in a couple of years or so. We're bringing all those lessons to think intentionally about how we can amplify the work that we've done and our impact. And that's what I've called Gender 3.0, where you're bringing together gender, climate through energy efficiency, and digital transformation. What does that mean? I've spoken about the alpha of being intentional with gender lens. We also are seeing that in our portfolio companies, when we're intentional about that energy transition, we're helping to optimize efficiency of companies. We're moving them from dirty fuel to clean fuel, which is not just a nice to have or a buzzword, but it's driving down costs by at least 30%, in some cases 50%. So operational efficiency. And we're seeing how digital transformation as well within those companies is enabling those companies to optimize their efficiency, to have better reach and accessibility to their customers and new markets, and for their customers who have previously been excluded to have better access to essential goods and services. So at the intersection of gender lens, digital transformation, climate and energy efficiency, we're seeing the power and ability to amplify on our work, our returns, and our impact. And this is so exciting for us. And we've launched this fund, and we've started fundraising, and we're seeing considerable interest, and we think it's going to be a game changer.